Can you build wealth with your VA loan in 2025? Yo. Welcome into the Moving to Norfolk podcast. I am your host, Craig Houston, local realtor in the Hampton Roads Market, 21-year military veteran, retired. I'm ready to get into how we're going to bring you the information that you consistently going to want to tune in for. If you even thinking about relocating to the Hampton Roads market, wanted to understand what's going on with the national market. If you're thinking about moving to Virginia Beach, Chesapeake, Suffolk, Norfolk, Portsmouth, Hampton, Newport News, even Williamsburg, we have you covered here. Man, we're going to talk about so much information, and I'm super excited for what we're going to bring you today, because I think what you're going to get out of this episode up front, I'm going to be candid with you in this podcast on what I think about military service members, active or veterans, who have access to their VA home loan, while you need to be thinking about situational awareness when it comes to how to build your wealth with your VA loan. And if you haven't already started that journey yet, we're going to talk about how you can get prepared and do it quite well in 2025. So lock in with me. We're going to be here just a little bit. We're going to take up a little bit of your time, and I want to thank you for being here with me. And let's get directly into it, man. Like, we're going to start right into what we want. One of the major topics that we're always talking about, interest rates. Let's get directly into what's going on with those right now. So 30-year fixed rates is down right now. The market is seeing this thing go up. So when I say down, when it comes to interest rates, that means the market is increasing these rates. They're not improving. They're going up even higher. Okay. So right now, the 30-year fix on the national average sits around about 7.10. The 15-year fix on the national average sits at 6.45. Then if you're in that market for a 30-year jumbos, you're talking about on the national average, you're looking at about 7.30. And 30-year FHA is at 6.44, and 30-year VA is at 6.45. Now, that's our interest rates right now. I want to get into what happened in the November 2024 market real quick. I know that a lot of you are not really aware of where we're at consistently in our Hampton Roads market. Usually when you're either buying or you're selling or you're looking to invest, you care to know what the trends is then. But what I want to do is I really want to take some time. I want to break this down for you a little bit, not spend a lot of time on it, just a little bit, because I think this is important for those who are tuning in now to get this type of information, to understand what our markets really look like. Now, if you want to get this message consistently on, and you don't have time to tune into YouTube videos, we do produce a newsletter every week to everyone in our sphere, where we actually communicate with everyone in our market who actually signs up for our newsletter. They get this information in their inbox every week. So if you want to do that, use the pinned comment down below. We'll be able to get you that information, and we look forward to being there with you every step of the way through your home journey, whether you're purchasing with us or you're using another agent. However that looks, we don't care. We want to just help you be informed as a viewer and as a consumer in our market. Okay, so let's get into what we want to talk about today is what is going on in our market when it comes to actual rates. Okay, well, actually, the market itself, we already talked about rates. We're just going to talk about what's going on in our market currently. Okay, now what you'll see in our market right now is that we actually have about a median sales price going around about $350,000 on the average home sold. Okay, now this is not average sales price. I do believe that average sales price is a bigger indicator of what's really going on in our market. So, and that's going to be predicated based on what you're really seeing in the market. And it depends on what city that you're looking in as well, living in, or looking to purchase in or sell in. Okay. So let's talk about how many settled sales there are. 1,862 settled sales in the last month. That's down about almost 10%, which is not surprising. We are in the market right now in the fall. We started to see our sales tend to trail off a bit. I think 1,862 sales is pretty good. Actually, I mean, last year, this time frame, we was up 10%. But I mean, if you're really looking at it, it's an ideal market right now. You're still seeing transactions happening. And I mean, like some people say, transactions are going to happen every day. So it's good to see that that's going on right now. We have a median days on market, about 22 days on market. That's been pretty much even for across the board from October to November. And then you'll see average percentage of list price received is up 0.1%. After obviously being on a little bit of a slide here, you'll see that kind of trending up, and now we're trying to trend back the right trajectory. But like I said, this is the fall months, so we should be seeing that type of information coming in where things are starting to slow a little bit, prices starting to settle and reduce a little bit, and things of that nature is happening. So not surprising. Median sold per square foot is about $204, which we've seen that really trend over the last year up to this whole all of 2024, which we are seeing dollars per square foot just continue to increase across the board, which is not surprising. I mean, obviously it's going to happen when prices go up as well too. So it's not surprising. New listings now. We're down 23.5% on new listings. We're down to 2,259 new listings in our market. Now, this number right here is indicative of showing where we're at in our market as well. The reason why I say that, and I'm basically sounding like a beating drum right now, is that realistically, no one really wants to sell their house in November, December timeframe. You're starting to, do the last little things with your family, whether you're taking family trips, having family come in to visit, you're going out to just enjoy your time with your family. You don't want to be, prepping your house for sale, having people in and out of your house. Some people don't even want to be going through people's houses during this time frame, trying to figure out if they want to buy the house or not. So I used to look at this time of the market as those buyers who really need to do it and sellers who really need to sell. Okay. Really and truly, that's where we're at. So to see this down 23.5%, not surprising. We was up about 5.8% this time last year, a little bit more. So we had about 2,400 homes of new listings on the market this time last year as well, which, not a significant difference. I mean, the 23.5% makes it seem like a lot more, but it's really not that bad. And like I said, it's up 5.8% versus what we had last year. So we're doing well. We're doing well with new listings still, I believe. Now, active inventory, 4,738 active homes on the market right now at the end of November 30th. Now, what I think about this is that we are in a great balance with months of supply of inventory. Like you see it is at 2.5 months of inventory available currently right now, which we are typically between 4 and 6 when we're in a buyer's market. So we're not in the buyer's market, and I don't really think we're in the seller's market. I think we're more so in a neutral market at this point in time. I think price points, neighborhoods, and the inventory in competition in your market depends on what your price point is, and it depends on how much demand you're going to have for your home. So the inventory I think is spot on where we're at, whether you're going to be in a seller's market, buyer's market. I love that we're in a neutral market right now. It makes negotiations better for buyers, and it still helps sellers still net the most out of their potential outcome here. So I don't think we're in a bad market right now. I think this is just, a very natural, neutral market. And, we're going to see how it plays out in the beginning of January. I can tell you from experience this year, January 2024, it was a spike. We seen people making moves left and right. And when we came out in January 2024, all the way to about March, it was pretty much busy across the board. And I imagine that we're going to see that frenzy happen again. Now, there's going to be a minor difference here, though. See, the market was still trying to figure out what the Fed was doing with interest rates in 20 at the beginning of 2024. I think we know what they're doing with interest rates going forward. They've been very clear on their stance on how they feel about interest rates. And we're starting to see inflation starting to come down. So I do think that interest rates are going to hold steady. So now what we're going to start seeing now is that if buyers are really interested in buying, we're going to start seeing now where buyers are going to be worried about pricing versus interest rates and the right payment in correlation to pricing, which interest rates play a role in that, obviously. But I think that's what we're going to see more of, is that can I afford the home that I want to purchase? And if I can afford it and it's in my budget, that's what we're going to see more people start paying attention to, because refinance season is still not underway yet. And a lot of people thought in 2024 we'll be seeing a lot more refinancing, but I think we're about at least another 14 to 18 months away from maybe even seeing that. And I mean, we could talk about that in later videos as we continue, this podcast, and you get the information that you need. So if that's something that you care to know more about, definitely let us know. We'll talk about that. And I want to get into our next topic here, though. Our next topic is going to be about military pay raises. Okay, I want to talk about military pay raises because we have a question that we're going to get into here later in the episode about buyers who are thinking about purchasing, because there's been a significant increase in pay raises for military personnel. And I want to talk about this just for a second. I want to speak to my tribe just a little bit. If you know someone that's in the military, know someone who used to serve, who actually have not used a VA home loan, hell, even if they have used it, I really want you to share this video with them, share this podcast with them, because I'm going to break down some things here that I think is going to be very useful and beneficial for those to know. Now, some of this may be information that a lot of you may be aware of, and in some cases, this information is going to be new to some. So we're going to just talk about it from a standpoint here. Now, I'm not going to get into the weeds of pay raises. I'm just going to give you the overview of it. And then we're going to talk about, where our question is going to lead us into. We're going to talk about these things on a little more granular scale at that. So let's just get into what's the main sticking point here. Senate, they came through and finalized enlisted pay boost in 2025. So basically, we're going to see across the board in 2025 for all troops a 4.5% pay raise for every pay grade, okay, which is a nice pay raise. If you was to go back and was to look at basically the pay raises over the last few years, over the last 5 years, on average has been about 3 to 4%. We had the 1 year that's an outlier, like 2.7%. But based on what has been trending with inflation, we have seen military pay scales increase over time. Now, one of the significant things that's happened, though, is that E4 and below will be getting an additional 10% raise in April of 2025. Now, this is significant to me because what they're doing is now trying to be very competitive, and it signals that they're trying to be very competitive with the civilian sector, really and truly. Like, you're seeing a lot of service members leave the communities that they're in, whatever service branch they may be a part of, whether that's Army, Navy, Marine Corps, Space Force, Air Force, Coast Guard. You're seeing this become more of a thing now. It's being more prevalent where they can go out, get civilian jobs, and make a little bit more income than they are working in the service and defending their country, defending our borders, doing all those things that they do, the great service members that we have. Now, the reason why this is important to note is because a lot of these service members, E4 and below, who are going to get this 10% increase in April, they are going to now be making somewhere north of 30 to 40 grand. Depends on their pay raise, depends on their pay grade, depends on their years of service. All those things still play a role here. But making more than 30, a little bit more than 40, depends on your pay scale. It's significant. It's very significant. I mean, comment below. Like, is these service members making what you make? Or are they going to be making more? Like, you don't have to give us the number, but like, would you like to be making north of 30 or north of 40 grand when you're usually E4 and below is usually around the average age of 22, somewhere between 19 to 22. Okay. So like, when you're thinking about it, 19 to 22-year-olds making 40 grand, starting out their military career, that is significant. I think that is important to note, and I think that is something that we need to take into account. Now, one of the other things too that the DoD has done as we head into January, that they're going to be seeing an increase in BAH. Now, BAH has a basic allowance for housing. I'm talking a little fast, so if you need me to break some of this down for you, feel free to book a one-on-one call with us. It's a pinned comment down in the comments and in the description as well, where you can actually get on our calendar and you can actually see, what we have, to talk about when it comes to helping you with whether buying or selling. And we would love to have that consult with you. We don't mind at all. And we would love to give you the opportunity to kind of just, pick our brain and understand what we have in store for you, where we can actually help you, navigate whether that's buying or selling or investing. So we would love that opportunity. But let's just talk about basic allowance for housing. So basic allowance for housing is a benefit. It's an allowance that the military service members get when they make a certain pay grade, where they can be an individual living off post or off base, not in base housing. And it's based on your status, whether you have a dependent, whether that means you have a spouse, dependent is a child, parent. It could be any sort, long as it's classified, long as it meets the clarification that the military service classifies as dependency. Okay, so you can get individual, the military dependent BAH, or you can get military single BAH. Okay, those are two different scales. Okay, now 5.4%. It can be significant. It could be somewhere between $60 to $170 sometimes, on most cases, where you can see this increase at. And now, so wherever there's a military installation, it's usually based on that market. So if your market is down, if your market doesn't have significant high rates, you're not going to see a high allowance as well too. Now, but this allowance, which is what's great about it, is that it's tax free. So you don't pay taxes on this income. This is if you qualify for this allowance, you add that on to the pay raise that we just saw, where you're getting 4.5%. And if you're getting that if you're one of the ones that's getting that full 5.4%, you pay about almost 10% by itself. Now, let's say you're E4 and below, and you got one of these allowances as well. So now you got 14.5% from your pay raise, because you get the 10% in April, and then you're getting this additional 5.4%. That's almost a 20% increase in income. Now, why is that so significant? Okay, so let's talk about this from an E4's perspective. Okay, let's just look. Let's do that. Let's do E4. I was going to do E5, but let's do E4 perspective, because I think that's important to say. In Norfolk, we're going to pull up the 2024, and then we're going to pull up the 2025 BAH rates for E4. Okay. Now, in 2024, check this out. In 2024, E4 without dependents got 1545 in BAH. And this is used to pay your rent, or it could be used to pay a mortgage if you have a mortgage. Now, if you have dependents, you was getting $2,049. Okay. $2,049. So let's switch over to 2025, and you'll see if you have dependents, if you have without dependents, it's 1674, which is $130 increase. Okay. And then if you have dependents, 2154, which is $105 increase. So now you're getting a $105 increase. And if you're getting the 4.5% increase at the beginning of the year, that's about almost a $200 increase. Well, let's call it 150 for E4 and below. 150, 105. You had 255. Okay. And now you're getting another 10% increase, which is probably going to take you to another $120. So you're getting about $400, $500 extra in income a month with all these increases. Okay. Now, that to me is important. That is important. Okay. That is important to note. Now, I want to get into this a little bit more, because we have a question that we need to answer. And if you ever have questions that you want to answer by our panel or by me personally, definitely feel free to email us. Our email is down in the description below. We'll leave it there for you. It'll be the pinned comment as well too, with the newsletter email. Okay. And I want to get into this question that was asked. Okay. So here we go. Let's just talk about this question. I want to make sure y'all can see it. You know what? I'm just gonna take myself off the screen. Let's just talk about it. This email comes from Marcus Johnson, and he says, "Hi, Craig. I'm a sergeant currently stationed at Naval Station Norfolk. With the 2025 pay raise and the increased basic allowance for housing (BAH), I've been thinking about buying my first home." Great news, Marcus. I'm glad to hear that. He says, "I've been renting a small apartment in Virginia Beach, but with the extra income, I feel like I could finally afford a place of my own. Congratulations, my brother. I'm glad to hear that. My main concern is whether It's the right time to buy. Okay, we're gonna get into that. I've heard that interest rates are higher than they used to be, for sure, for sure. And I don't want to get stuck with a bad deal. On the other hand, I keep hearing about how VA loans make it easier for service members to buy homes without a down payment. Uh, okay, somebody's giving you some good advice there, but I'm also worried about being stationed somewhere else in a few years. Do you think it's worth buying a home now, or should I keep renting until I'm more certain about my future? Looking forward to hearing your advice. Thanks, Marcus Johnson. Man, Marcus, I am glad to hear that you are paying attention and you have the pulse of what's going on. Now, I'm gonna tell you something about Marcus. What I understood from Marcus. Marcus is no fool. He's surrounded himself with some quality individuals to give him information. Now, sometimes though, when you're in those circles, what happens is that information is so limited until someone else can come in and give the full knowledge that's needed for the whole group to increase their knowledge. And this is what I'm going to do for you today, Marcus. I'm going to let you go back to your group and provide them with the information that's required to understand how you can make the wise decision for yourself on what's best for your future. But then also you can share with your compadres, your fellow service members, and talk to them about, hey, I understand this is what you can do with your VA loan, because we're about to get into some tactics and some tools here. Okay. So, get your pen, get your paper, line it up. Let's get to it. And if y'all ever want to consult to talk about this in person or, over a video call, I do Zoom calls all day long too. Use our link down below and the pin comment as well. So let's get into this. Let's start first, Marcus, with the very first thing that you brought up. Well, not the very first thing. It's the very last thing that you brought up. I'm going to bring that back up on the screen for me real quick. So you said, do you think it's worth buying a home now, or should I keep renting until I'm more certain about my future? Let's start there. Now, Marcus, that is a great question to close out your letter with. And I appreciate that, because every situation is different. And what I mean by that is some people just are only meant to rent. Some people want to be homeowners. Some people think that the American dream is owning a home. Some people look at owning homes as generating wealth. Some people think owning a home is not for no one. They think it's a scam in some ways. Okay, property taxes, interest rates, all these type of things. People come up with some of the darndest things to say. But let's just talk about it for the standpoint of what we want to stay focused on in this conversation is, Marcus, I mean, as a service member in the military, you already understand that you're only going to be in certain areas for so long of a time. Now, during my 21-year career, I have seen service members stay in the same local geographic area the entire time of their career. They never left. And some of those are rarities. I can tell you from my time frame that I did my first 8 years was in Virginia. I did 3 years in DC. I went and did 5 years in San Diego, and then I did 1 year in Romania, and then I came back to Virginia for another 3 years. And guess what we did after that? We retired. Okay, so that's how some of this plays out for certain people. So if you're similar to me, you already know that you only have so much time left in Norfolk, maybe, possibly. But if you really want to stay here, there may be opportunity for you to stay here the whole time too. I know people who have never left this area. So the main thing to me is, Marcus, when you answering that question for yourself is, if you got 2+ years here, I believe in my whole heart, and I explain why, you should own. Okay. And I'm going to keep it very generic. I'm not going to get into a lot of details here because you didn't give me a lot of information to go off of to get very direct in the weeds. But let's just say that you are renting this home in Virginia Beach, and let's just call it's a condo, or it may be a townhouse, or it may be an apartment. And the average rent out there is somewhere, depends on if it's how small you're classifying small, 1 bedroom, 2 bedroom. You're looking at somewhere between $1,500 and $1,800. Okay. Easy. Now, if it's in one of the great parts of Virginia Beach, you're somewhere in the $2,300 to $2,500 range. Okay. Now, to me, let's just keep numbers simple here. Let's just say, Marcus, you're paying, just for the sake of conversation, $1,500. Okay, $1,500 in rent times 12 is $18,000 annually that you're paying in rent to someone else to pay their mortgage. Okay. Now, if you times that by 2, let's say you have 2 years left, like that we talked about, that's $36,000. Now, if you have no, 3 years left, you're at 54,000. Okay. So do you want to really give somewhere between 36 to 54 grand to a landlord that you get no benefit from? Now, I'm pretty sure there's some critics that's going to be in the comments, which is great because we need them there. I want you to give me all your feedback. I want to have a very great conversation with you all. So I'll be down in the comments as well, if you're giving feedback and answering y'all questions as y'all give them to me, or providing statements as well too. Now, some people don't want to live in Norfolk, which is understandable. You may be from Texas, you may be from California, you may be from Florida, you may be from Alabama, you could be from anywhere, and you may want to go back to those local vicinities, right? But so you're like, oh, I don't want to own here. That's cool. But let's talk about $54,000. If you gave that $54,000 and you bought a $200,000 condo, similar styles to what you already have, let's just say you have a 2-bedroom, 2-bath, and you get it for 205, 210, somewhere in that range, and you use that same $54,000 to pay your mortgage instead, right? Do you believe that you would get a return on that $54,000? Or do you believe that if you gave that $54,000 to a landlord and it went into a sunken hole, that you will be able to recoup that money? I'll wait. Like, let's just say, what we should do. This is for Marcus. Okay, so we should do this, and I'm going to do it. I'm going to bring up. You can always go over to St. Louis Fred, and I highly recommend y'all do this. And I may, if I can, we'll make a note. We'll bring this up. We'll bring this up in the. We'll link it down below in the description. I think this is something that you should know. I think you should know what has been the sales prices in Virginia the last 5-10 years. That's right. So let's just see what we have here. We have. Give me 1 second, folks. Stick with me. I'm going to bring this up for you right here. I just want y'all to see. Okay, so here we go. Check this out. This is all transactions of house prices index for Virginia Beach. Okay, so this is just giving you an idea of basically how we've seen transactions over the last since the 1980s. Okay, you've seen that this number just keeps on increasing in transactions. That's one. Okay, so that's transactions. So bring up the one for pricing. Okay, that's what I want you to see next. It has transpired over the last years. Now look at this. This is median sales price, listing price in Virginia Beach area. Okay, look at this market. Look at this market. We took that decline in 2021, and look what we have done ever since. Steady climbed. Steady. So what I'm getting at is, do you not think that you are going to turn a profit at some point in time? Whether that's 20 grand, whether that's 50 grand, whether it's 150 grand, depends on how long you're in this area. People have equity stored in their homes. And the sooner you get into the market, the sooner you start building and generating this equity that can change your life over time. Okay. Now, like I said before, I still stand on your credit should be in good shape. You should have decent savings. You shouldn't just go into buying a house and not be prepared for some of the minor expenses or major expenses that's going to come up over time. That happens. But realistically, you work with a good agent. You figure out the right home for yourself, the right qualities in the home that you're looking for. You're going to do well, I believe. Okay, I believe that. Now, let's talk about some of these other things that you had in here that I think it's important to make sure that we talk about as well. Okay. You said, I feel like I could finally afford a place on my own. My main concern is whether it's the right time to buy. I think it's always a great time to buy. I've heard that interest rates are higher than they used to be. And we already discussed interest rates at the beginning. And I'll get into that here in a second. But now it was one more thing that you said here. You said, on the other hand, I keep hearing how VA loans make it easier for service members to buy homes without a down payment. But I'm also worried about being stationed somewhere else in a few years. Okay, so let's talk about interest rates. I think that's important. I think we need to talk about interest rates. And I think it's unfair to Marcus to be in a conversation about interest rates. Okay. And the reason why I say that is because, Marcus, if anybody in your circle is talking to you about interest rates, I think you have to understand that right now Interest rates seem high. Okay. And unfortunately, if your friend Bob, I don't know if you have a friend Bob or not, but let's say you had a friend Bob. If your friend Bob bought a home during the pandemic where interest rates were at all-time lows, right? When they was basically just giving homes away. I don't want to say they was giving them away, but they basically was giving them away. Interest rates were very low. They was very low. And I mean, it's nothing that you can say to someone to make them feel like, they got a good deal on the interest rate. Like it's not a thing. I mean, like I applaud all the people who got interest rates in the twos, the threes, or whatnot. And some people just wasn't, they was on the fence. They didn't understand how it should be, and that affected them in a lot of ways, which is unfortunate, like I said. But here's the thing: interest rates are what they are. They move each and every day. You saw what I just showed you on the chart when we began this episode was how interest rates just continue to fluctuate. They fluctuate. They're going to continue to fluctuate. They're not going to, go. They're not going to stay the same. They're never going to be parabolic. They're going to go up and down. And I mean, we've had some rug pulls in our lifetimes, but realistically, you are talking about interest rates are not going to stay in the sixes. They're not going to stay in the sevens. Even if they go up to those levels, can you believe that interest rates was those high before and people were still buying houses? So my question to you is, even if the interest rates do go higher, do you think it prevents individuals from purchasing homes? That's where you got to start at. Okay. So I do get the thing about, interest rates being high. I'm never going to, go against that grain and tell you otherwise. They can be a little bit higher right now, but I mean, people are still buying houses in the fives, sixes, 6.5, 7. Hell, we've seen people buy houses in the 7.7 range. Okay. So I don't think that's a problem. I think that your friends can make you feel like that's a problem. I do think that when people say, "Oh, what's your rate?" is 5,000 is 5.9 and they got a 2.7 and they're paying almost half of what you're paying for the same type of house, it could be demoralizing. It can be, but it doesn't stop you from still growing equity. So I think those are the things that you got to look at first. If you could afford the home, buy the home. That's my message to anyone that's listening to the other side of this microphone. Yeah, if you can afford the home, buy the home, and don't worry about the interest rate later. The interest rate is going to present itself an opportunity for you to refinance. Think about the people who bought houses in 2017, 2015, 2012, and they was buying these houses and they was in the 4s and the 5%. Matter of fact, 2014, we bought a house in San Diego 4.25%. Okay, 4.25%. Now, think about those people in 2020 when they was in the 5s and the 6s on these houses that they bought. And the Fed says, "Oh yeah, we're gonna make the Fed fund rate negative, and the interest rates and the banks dropped them down to 2%." And everybody was calling in saying, "Yo, I need me to refinance." They did not anticipate dropping four percentage points on their interest rate. Okay, so if they didn't imagine that, and now they're sitting with all this equity, what do you think could possibly happen to you in the future? Whether it comes down or not, if it does, you're still well positioned because you bought now and the market continue to trend higher. Okay. That's what I think people need to realize. Now, when it comes to your VA loan, this is what's important too. The VA loan, you don't have to pay a down payment, which is great. Now, one of the good things about not having a down payment, let me explain that a little bit. If you do a FHA loan, FHA loans are, where you actually can still get a first-time home buyer loan where you don't have to put the full 20% down. You can get a home for a little as 3.5% down. And when you put that 3.5% down, it comes with mortgage insurance. Okay. So imagine that you showed up for $350,000 house, right? That's the average. That's the median sales price in the Hampton Roads community. Okay. $350,000 at 3.5%. That means that you got to bring $12,250,000 for down payment, right? And your lender will fund the rest of the loan. But that comes with mortgage insurance because you didn't put 20% down. Now you saying, Craig, what is 20% of 350,000? Well, let me tell you, that's 70 grand. So that's what the FHA loan provides you with. It provides you an opportunity to not have to bring 70 grand to the table. Okay. Now, there is a conventional loan. Okay. Now, some people do get it confused. They do think that if you do a conventional loan that you have to do 20%. No, you don't. You do that same you could do that same 350,000 and you could bring as little as 5% on a conventional loan. And that means that you have to bring $17,500. Okay. Now, the difference between these two products is that if you don't bring that full 20%, you have mortgage insurance. Well, if you're using a VA loan, you don't bring the down payment. So that same $350,000, you need zero for a down payment. Now, there is a way that they kind of, go ahead and do the mortgage insurance already added into the loan, but it's rolled into the loan. It's called the VA funding fee. Okay. The VA funding fee is a percentage of the actual loan itself, or the purchase price that you actually agree to. Right. And the VA funding fee currently right now, let's see what the VA says the VA funding fee is currently right now. The VA funding fee currently right now is going to be, I'm going to show it to you on the screen because I love showing y'all, doing show and tell. So when you look at the first use, if your down payment is less than 5%, which means zero down, your VA fee is going to be 2.15% of the purchase price. Okay. So what they're going to do is they're going to take this 0.0215 and they're going to wrap that in. Now that means that your loan on top of the 350, let's say you just purchased at 350, plus that 350 is going to be another $7,500. So 7525. And basically your loan is going to be for the entirety of $357,525. Okay. But guess what? You don't have to pay mortgage insurance because it's already wrapped into the loan. Now, if it's your second use, it's 3.3%. So it goes up a little bit higher if you use it for the second time around after the first time. Now, if you put more than 5% down, which I don't recommend that you would do that. I would recommend to my clients, keep their money in their pocket and just have them wrap it into the loan because it's not going to really save you that much of difference, right? So if you bring 350, we already talked about this, and you bring 5%, 5% is 17 grand. So for you to get 17 grand, so you'll get 17 grand up to save yourself on that funding fee, that same amount of the price of $5,250. So they're still gonna put $5,250 in there. So you basically, for you to give 17.5 grand up, you only save $2,000. It's not worth it, in my opinion. Okay. So, but do what's best for you. I know everybody's situation is different. So don't let me, dictate what you do with your money, but that's what it would be. Now, the good thing about this VA funding fee is that it's not a good thing, but if you have a disability rating 10% or more, you actually serve 10% service connected disability or more. If you're a veteran, they waive the VA funding fee. So that $7,500 goes away if that's your first use on a $350,000 loan. Or if it's your second use, it doesn't even matter because you're not going to pay the increase of 3.3%. It's going to be waived. So that's the good thing about it. Now, here's the other thing, Marcus. Marcus, my man, I appreciate you for this email because I'm about to put y'all on even more game right now. So get your pen back out. The VA loan conforming limit. The conforming limit means that instead of you going into jumbo territory means that if the bank can't do the loan at the maximum, the next level up, whatever that purchase price is, they have to charge you a higher percentage on the interest rate. Okay. Now, the VA loan conforming limit goes to $806,000 next year. So you can get a house up to $806,000 with a low interest rate. And if it goes to 807, then you go into jumbo territory, but you still can get the loan through the VA. It doesn't mean that you still can't get the loan. And if you get the VA funding fee, if you are so imagine $807,000, no down payment, and then you have the VA funding fee wrapped into it. So that's gone. And all you have to do is provide closing costs. Okay. Those are opportunities. Those opportunities. Marcus, I hope that you want to sit down and have this conversation in person. And I would love to do it over a Zoom call. If you need to, book down below with us in the description and in the pinned comment get on our calendar, and we would love to have this conversation with y'all. Look, this is the Moving to Norfolk podcast. I hope that I'm providing y'all with value and that you enjoyed this conversation. I'm curious. What questions and concerns do y'all have about anything that I broke down today with the VA loan and what's going on with military pay raises and BAH? I would love to know. And if there's anything that we can do for you in the future, definitely just let us know. And we'll be back again with our next episode. We're planning on being here 2 times a week. And if we can be here even more than that, we will. And I appreciate y'all. And I'll catch y'all in the next video. Y'all stay safe. Peace.